Late on Thursday, as President Joe Biden was honoring officers at Iwakuni Marine Base and Rishi Sunak set off for Hiroshima from an exclusive Tokyo business club, a keynote was circulated among global investors. Entitled, Japan's Rising Sun, it was prepared by the chief economist at the Bank of Singapore, revitalizing a metaphor that has recurrently enthralled and disappointed. As the note suggested, Japan might, finally, be awakening to an era of economic resurgence. If you're new here, make sure to hit that subscribe button and leave us a like. The analysis arrived during an interesting confluence of events. Japan is currently embracing and being accorded some much-needed economic bravado. The nation's stock index, the broad topics, has just touched a fresh 33-year high, backed by an exceptional 6 straight weeks of foreign institutional buying. Undoubtedly, this fervor stems partly from the general anticipation of accelerating governance reform. However, it's largely a reaction to the most significant change in the Japanese economy in decades, the shift from a generation-long deflationary period to sustained inflation. For the first time in many years, there is a palpable buzz surrounding the Japanese economy. The Bank of America's analysts have started outlining scenarios where, in the long term, the topics could grow another 33% to surpass the unattainable peak of Japan's 1980s asset bubble. Meanwhile, the world's largest chipmakers are engaged in dialogues to potentially bring significant manufacturing back to Japan. This comes as a response to concerns about economic security and a global revamping of supply chains. Further contributing to Japan's current sunrise is its geopolitical positioning. Prime Minister Fumio Kishida is seizing an increasingly rare opportunity for Japan to stand as the most influential Asian representative at international tables, including the G7 summit. In the backdrop of escalating military tensions and the threat of a new Cold War, Japan has successfully positioned itself as a stable, steadfast partner of the West. Yet, the harshest challenges are expected to surface in the aftermath of these promising indications. Once the G7 leaders depart and the investors reevaluate historical data of Japan's past failed economic upturns, the nation will have to face its persisting realities. China remains its largest trading partner, its population is declining at an alarming rate, and its corporations, geared for global growth, stand on the precipice of a possible global recession. Despite these realities, the optimism is tangible. As Stefan Ongrich, senior economist at Moody's Analytics, emphasizes, the true strength of the Japanese economy has always been its stability. In a world swirling with chaos, Japan's blend of moderate growth and steadfastness may indeed be a coveted feature, not a flaw. The upcoming CLSA event is anticipated to host around 500 international investors, all of whom have strong reasons to believe that Japanese stocks will maintain their upward trend, unseen for over 3 decades. Large investment firms such as Elliott and Citadel have announced plans to open offices in Tokyo or to expand their focus on Japan. Warren Buffett's April visit to Tokyo, coupled with Berkshire Hathaway's investments in 5 Japanese firms, has shifted global attention to the Asian nation. One of the key reasons behind the revived investor interest is the undeniable pressure now on Japanese management to engage proactively with shareholders, a shift from previous practices. This year, the newly appointed head of JPX, Hiromi Yamaji, expressed regret over the majority of TSE stocks trading below their book value. He proposed supporting measures that encourage companies to enhance corporate value, reward shareholders, and pay more attention to their cost of capital. Bank of America's chief Japan equity strategist, Masashi Akutsu, is optimistic that the TSE's plan will work without punishment. He highlights the change in the economic scenario since the introduction of the Corporate Governance Code in 2015, with inflation altering the economic landscape. Shareholder activism has also become more mainstream, increasing from less than 10 in 2014 to almost 70 activist funds in 2023. In addition, the fear that previously compliant domestic pension funds and institutional investors might vote against management for any governance-related issues is influencing corporate behavior in Japan. Veteran Tokyo broker, Adrian Gornall, views the push for better governance, primarily driven by Japanese entities, as a significant shift in corporate attitudes. Two more factors influencing the current scenario are the potential for foreign acquisitions of Japanese manufacturers due to supply chain changes and the desire of investors to gain exposure to China without directly investing there. Christopher Wilcox of Nomura suggests that geopolitical uncertainty around China is beneficial for Japan, positioning it as a safe option for international investors seeking exposure to Asia. However, the rising sun hypothesis has frequently been followed by a sharp reversal due to persistent concerns about Japan's shrinking and aging population. Japan's stock rallies are typically strongest under a pro-reform government, and the effectiveness of Kishida's leadership is yet to be fully determined. Moreover, despite the recent 6 weeks of net buying, skepticism remains about the sustainability of the stock rally. Major global fund managers remain underweight Japan, and passive buying has mainly fueled the topix's ascent to a 33-year high. Yet, optimism persists, with brokers eagerly waiting to see whether the CLSA conference will start the inflow of active investment, ultimately altering global fund allocation. In conclusion, Japan's economy has shown a robust resurgence as it embraces a new era of reform and resilience. An array of factors, including the country's geopolitical stance, the return of sustained inflation, and an unprecedented shift in corporate governance, have reignited investor interest, leading to a buoyant stock market. This rejuvenation has manifested in numerous ways, including international investors considering Japan as an indirect gateway to Asia, potential foreign acquisitions of Japanese manufacturing facilities, and a record rise in activist funds. Despite existing challenges, such as a shrinking and aging population and uncertainty around Kishida's leadership, the optimism remains palpable. The coming times will reveal if this trend of Japan's rising sun is truly different and here to stay, paving the way for sustained prosperity.